most important conversation of the day is now. Brian Belski with us with Humilis Investment Strategies, and the wonderment of his 8-page note, densely written, like, damn, I've got to read every word, is this is the courage, this is the thinking to stay in the market. Is the mood out there a panic? Are people, quote unquote, going to cash?
I think a lot of institutional accounts are kind of waiting to see to happen. You know, the majority of who we've talked to recently, obviously, are our great wealth management clients, and they've been waiting for an opportunity. In Canada, they're still a little bit worried with respect to what's happening in the U.S., and they kind of see this as a replay of last year, so they're a little bit more emotional. But in the U.S., we're ready to put money to work. I think a lot of people kind of redid their portfolios and kind of configured at the end of the year, Tom. And there's been a lot of talk with respect to some tax gains taken at the end of the year. So I think there's some cash on the sidelines that are ready to go.
Is Microsoft at a PE at 22 forward, like a new Microsoft?
You know what's interesting about Microsoft is that last year it was kind of the darling in terms of the war chest of cash. And in terms of how we look at Microsoft and kind of core and large cap portfolios, it was tough to continue to be overweight that stock. So we're more neutral in that stock, where I think that the Apples and the Amazons, which actually underperformed the Mag 7 last year, are better. But I think Microsoft, Oracle, Palantir, from a software perspective, are going to kind of get through this malaise, let's say. The thing that you have to understand is you don't have to own everything, guys. You don't have to own everything. And I think sometimes the market has been trying to outsmart themselves by trying to pick the bottom in some of these SaaS names.
It's a really important insight there. It goes back to Munger, where you don't have to look at it. Oh, can you hear me buttoning and unbuttoning my Red Sox jacket?
Absolutely.
This is Don's. It's the only one that fit me was Don Zimmer's jacket.
Exactly.
Way back. I'm in for those of you on radio, I'm in Wisconsin Red Sox today. And drawing it down for Giants Yankees, Paul Sweeney in his Yankees jacket with Brian Belski.
Absolutely. Hey, Brian, what we saw a little bit before Iran started was a little bit of rotation in this market. Out of some of the higher multiple tech names, maybe into some more cyclical names, maybe in small and mid cap. Is that a short-term trade? Is that something that plays out in 26 as well?
I think it's the real trade. When we wrote our year ahead piece in the first week in January for both the United States and Canada, especially in the U.S., we talked about a broadening out of the market finally. We also talked about and defined what an earnings-driven market looks like. Typically and historically, the beginning stages of cyclical bulls, which we saw in 23, 24, 25, was this momentum, multiple-driven market. We've transitioned to more an earnings-driven market. Think about the earnings growth is really good. So when that happens is you see dispersion increasing, meaning stocks trade at different levels and different technical type performance. But more importantly, the earnings side really tried to drive things. So I think investors have a hard time dealing with that, and traditionally that's a more volatile market. So if you look at an earnings-driven market relative to a multiple-driven market, the upside is roughly half. Let's just keep the math simple. But it benefits names that have been underperforming, like small cap, like financials, like some industrials. And I think that's where we want to be longer term. Again, I've said this for a while now, and we've been a little early, but I think we're right. 10 years from now, we're going to be kicking ourselves if we don't own more small cap.
Okay. How about the AI trade? Again, I'm trying to think about what's been going on in the market outside of Iran. And of course, AI trade has evolved. It used to be just buy everything, you know, and who's ever spending more money, that's where you want to be. Now the market's trying to be a little bit discerning winners and losers. And you mentioned the SaaS stocks took it on the chin there earlier this year. How do you think about that?
I think discerning is the great way to think about it. So let's use a couple terms: demand, supply, expenses, and revenue. I think what's happening is we're trying to match what's happened in expenses and revenues, or spending. So how much revenue can we derive from that? And then in terms of the supply demand, who are going to be the winners? So there's been so much rhetoric in terms of what platform is going to be the best. I still think that you just got to kind of keep it simple and think about here's an apple, here's the core of AI is an apple, and the core is NVIDIA. So then what else do you want to own and be around that, and two or three in terms of every kind of theme, whether or not software or cybersecurity, but especially with respect to how you're the electrification of that, which would be the semiconductors.
How many, quickly here, how many stocks is a minimum portfolio for Brian Belski?
For us to fill a minimum portfolio, to be properly diversified in large cap money, we believe, and we've done a lot of back testing on this, 50 stocks.
50.
Because you can get as
Sequoia
high as
Fund, Fidelity 50.
5, 6,
John Mercenault.
5, 7% on the top end in terms of a position, 1% on the low end. For our small mid-cap money that we run at Humulus,
Right.
it's anywhere between 60 and 75. And I think going into, as we progress through this broadening out, you want to own more names so you have the opportunity to make more bets.
Okay, Brian Belski's all over the country, folks, in this industry of investing away from what we do here. I'm not a fan of this, but we're going to get his knowledge base. James Diamond on the cover of Barron's this week, Mariotto's front and center for JP Morgan, and they've had huge success with their hedged ETF, whatever it is, JPMI, whatever the code is. Brian Belski on the modern rage of own the S&P, hedge it for a more stable income, and give away the upside. Your thoughts on this, what we see out there right now?
Well, in Jamie, we trust. One of my great friends in the business, Hamilton Reiner, does a lot of these things that worked. That was a great client of mine when I was on the institutional side. I think those products are important. What we like to think is that the passive market has peaked. Active investing, own stocks, keep it simple. 1990, I had the ability to meet Charles Schwab, Peter Lynch, and Warren Buffett in the first 6 months of the business at William O'Neill. Okay, and Warren Buffett said, "Don't buy anything unless you can reach out and touch it. Keep it simple." And I think sometimes we try to outsmart ourselves. That's why we got in trouble, I think, in private equity, Tommy, this time around.
How big is the upset in private credit? We're running out of time.
I think we see an unwinding there that is ultimately not going to. It's not systemic. I think we've already established that. But that ultimate unwinding is actually going to be positive for publicly traded securities, especially small mid-cap.
Is the Twins just a funding place for baseball teams?
Oh my gosh.
Before they go to the Dodgers, the Giants, and the Yankees?
The answer is yes. So your Sox, right? They've been after Joe Ryan. They should just take him out of his misery. I mean, the Twins are going to win 70 games. They beat the Sox. the Twins beat the Sox yesterday 15-6.
I wish he get animated about equities like he does about it. It's a beautiful ballpark.
26 years, Tommy. 26 straight years of season tickets. What did they get me? Here's your code to log into your tickets. Nothing.
I mean, it's a great divide within
it's a beautiful ballpark, but even the Yankees. Remember Don Zimmer ended his career with the Yankees, so the Jackets.
It was a great trade, like Babe Ruth. Okay, well, this is a problem. Sarah emails it and says, "Tom, there's not enough Orioles talk."
Right. Yeah.
I was talking to Mindy Ripken yesterday up in the food court. She can't even concentrate. She's so pumped.
Twins open in Baltimore tomorrow.
Oh, really?
Camden Yards.
Must watch.
Yep.
You know they're our favorite team.
I know.
Yes.
They're going to get crushed.
Choice.
Give me like a 12-2 game.
Mr.
Orioles.
Bloomberg's got a bag of Cheez-Its in his hand going, "Tom, I don't hear enough Orioles talk."
Yeah, exactly.
Brian, thank you so much.
Thank you.
Is this Humulus thing going okay for you?
It's going amazing. Thank you so much.
You look tanned and rested.
Wow, it's Naples. This is my lunchtime walk routine, and I process and I listen. I listen to Bloomberg Radio on my walk.
Please.
See how I did that?
It was very nice. I like that a lot. I mean, are you squeezing like a 70-hour work week into now 80-hour work week?
Yeah, exactly. When you're the chief bottle washer, the chief compliance officer, the chief of staff, and picking stocks, it's a lot.
Courage to stay in